Welcome, Nillionaire Investor. The world of investing constantly evolves, presenting new frontiers where immense wealth can be built. The promise of autonomous vehicles is a frontier, a complex blend of innovation and profound societal change. June 23, 2025, marks a pivotal moment for Tesla and the broader autonomous vehicle industry as Tesla officially launched its highly anticipated Robotaxi service in Austin, Texas. This move, long promised by CEO Elon Musk, represents a significant step from advanced driver assistance systems towards a full-fledged ride-hailing service, though with some important caveats. The initial rollout is a pilot program, currently limited to a geofenced area in Austin, Texas, and available to a select group of early access users, primarily Tesla investors and social media influencers. Passengers are able to hail these autonomous Tesla Model Y vehicles through a dedicated Robotaxi app and are charged a flat fee of $4.20 per ride. The app functionality allows for destination selection, route changes mid-trip, climate and entertainment control, and provides real-time ride information. It also syncs personal preferences from the user's Tesla account. Crucially, these robotaxis are operating with a safety monitor in the front passenger seat, ready to intervene if necessary. While no one is in the driver's seat, this oversight differentiates Tesla's current public deployment from Waymo's fully driverless operations in some areas of Austin. This cautious approach, despite Musk's earlier pronouncements of truly unsupervised robotaxis by this time, underscores the complexity and safety challenges inherent in achieving Level 4 autonomy. Reports from early riders indicate generally smooth experiences within the geofenced zone, with the vehicles capably navigating turns, speed bumps, and traffic. However, some criticisms regarding wait times and the relatively small operational area have also emerged. The launch comes as new Texas regulations are set to take effect on September 1, 2025, requiring state permits for self-driving operations and mandating adherence to strict operational standards, including onboard recording devices and emergency response protocols. Tesla will need to navigate these regulations for broader expansion. This launch, while a significant milestone, should be viewed with a balanced perspective. It's a positive signal for Tesla's vision, validating years of its vision-only development and demonstrating its AI can operate autonomously for ride-hailing in controlled environments. However, it's still a proof of concept, not full commercialization, yet. The presence of a safety monitor and the geofenced area indicate Tesla is still in a rigorous testing and validation phase. The market impact, while initially positive for TSLA stock, will depend on how quickly robotaxi revenue can genuinely move the needle for the company. Understanding levels of autonomous driving, SAE International Standards. Level 0, no automation. The human driver performs all driving tasks. Level 1, driver assistance. The vehicle has a single automated system for driver assistance, like adaptive cruise control or lane keeping assist. The driver is still responsible for all other aspects. Level 2, partial driving automation. The vehicle can control both steering and accelerating/decelerating in certain situations. For example, highway driving. The human driver must remain in the driver's seat and be ready to take control at any time, hands-on. Tesla Autopilot and many other current systems fall into this category. Level 3, conditional driving automation. The vehicle can handle most aspects of driving in specific conditions, for example, traffic jams on highways, and can make informed decisions. The driver can disengage from the driving task but must be ready to intervene when prompted by the system, eyes off. This is a significant leap from Level 2. Level 4, high driving automation. The vehicle can perform all driving tasks and monitor the driving environment in specific geofenced areas, for example, a specific city or highway route, or under certain conditions. The driver may not be required to intervene. This level includes robotaxis. Level 5, full driving automation. The vehicle can perform all driving tasks in all conditions everywhere. No human intervention is required. No company has yet achieved Level 5 autonomy. Key competitors to Tesla's self-driving vision, with ticker symbols and investment advice. 1. Waymo, Alphabet Inc. Ticker symbol, Google or GOG, NASDAQ. Waymo is a subsidiary of Alphabet. Technology employs a comprehensive sensor suite including multiple LiDAR units, short-range and long-range, radar and cameras, Uses high-definition maps and extensive simulation testing. Waymo has driven over 20 million miles on public roads and over 1 billion miles in simulation. Level operates at level 4 in specific geofenced areas, with fully driverless, no safety driver operations in some locations. Capabilities provides fully driverless ride-hailing services in cities like Phoenix, San Francisco, Los Angeles, Miami, and Austin. Plans to expand services to New York, Atlanta, summer 2025, and Washington, D.C., 2026. As of April 2025, it offers over 250,000 paid rides per week, totaling over 1 million miles weekly. Nillionaire Investor's take. Waymo is arguably the leader in deploying true level 4 robotaxi services. Investing in Alphabet is a diversified bet on a tech giant with Waymo as a high-potential long-term growth engine. Google Goog is a relatively safe way to gain exposure to level 4 autonomy, leveraging Alphabet's financial strength. The risk is that Waymo's success may not significantly impact Alphabet's massive valuation in the short to medium term. 1. Super Cruise, General Motors. Ticker symbol GMNYSE. Cruise is a subsidiary of General Motors. Technology, similar to Waymo, uses a comprehensive sensor suite, LiDAR, radar, cameras, and operates within defined urban environments. Has surpassed 10 million driverless miles. Level, operates at level 4 in specific geo-fenced areas. Capabilities, offers driverless robotaxi services in cities like San Francisco, Phoenix, and Austin. However, Cruise has faced significant challenges recently, including a suspension of its driverless operations after an incident in San Francisco in late 2023. They are gradually working to reintroduce and expand services. Nillionaire Investor's take. While part of GM, Cruise's recent operational setbacks highlight the inherent risks in deploying level 4 technology. Investing in GM provides exposure to Cruise, but it's a higher risk, higher reward component of GM's overall strategy. Monitor Cruise's operational recovery and expansion closely before considering it a primary driver of GM's stock value. 1. Mercedes-Benz Drive Pilot ticker symbol, MBG, Frankfurt Stock Exchange, also traded as ADRs in the US as MBGF on OTC markets. Technology combines cameras, radar, and LiDAR, along with ultrasonic sensors and a highly detailed HD map. Features redundant steering and braking systems. Level 3, the first to be approved for use in certain states in the US like Nevada and California, and also in Germany. This allows for eyes-off driving in specific approved conditions. Nillionaire Investor's take. Mercedes-Benz represents a more conservative, yet pioneering investment in level 3 autonomy. They are taking a responsible, regulated approach. Consider MBGF for exposure to a well-established automotive OEM that is deliberately and legally pushing the boundaries of self-driving. It's less of a pure-play AV bet than Waymo or Cruise, but offers stability and dividend potential. 1. Ford Blue Cruise, ticker symbol FNYSE. Technology combines forward-facing cameras and infrared driver monitoring, operating on geo-fenced blue zones. Level 2 hands-free on mapped highways, including adaptive cruise control and lane centering. Ford provides stable automotive investment with strong commitment to ADS. Blue Cruise is competitive. F is a value play offering dividend and upside from hands-free driving adoption. 1. Mobileye, Intel, ticker symbol, EMBLY, NASDAQ. Develops vision-based ADAS and autonomous driving solutions, providing chips and software to automakers. Offers solutions from level 1 to level 4. Supervision system comparable to Tesla's FSD. Mobileye drive vehicles piloted in Germany, Norway, Croatia, and the United States. Mobileye is a picks and shovels play, selling components to multiple OEMs. This diversified approach is less volatile than single AV developers. Interesting bet on ADAS adoption. Less robotaxi revenue exposure, but strong supply chain position. 1. BMW Active Driving Assistance Professional Package. Ticker symbol BMW, also BMWI, combines cameras, radar, and robust driver monitoring system. Level 2 hands-free driving in traffic jams and highways, including automatic lane change. Motorway Assistant allows hands-free travel up to 85 miles per hour with driver attentiveness. BMW offers premium automotive brand with steadily improving ADAS features. BMW iY is stable luxury automotive investment, with self-driving adding incremental value. 1. Hyundai Genesis Highway Driving Assist, HDA. 2. Ticker symbol, YMTF, OTC markets for Hyundai Motor Company, or HIMUF, OTC markets for Hyundai Mobis, which develops some of the tech. Technology uses cameras and radar. Level 2, adaptive cruise control, and lane centering assist on highways. Capabilities: provides assistance with maintaining speed, distance from other vehicles, and staying centered in the lane. HDA2 can also assist with lane changes and fine-tune lane positioning. Nillionaire Investor's take: Hyundai has made significant strides in ADAS technology. While not a pure play, they are a major global automaker. Investing in Hyundai Genesis through HYMTF offers exposure to a large, diversified automaker with a growing reputation for ADAS features at competitive price points. It's a lower-risk investment compared to pure AV startups. 1. Rivian Driver plus ticker symbol RIVN, NASDAQ. Technology utilizes a sensor suite including cameras and radar. Recent software updates have improved autonomy visuals and expanded perception range. Level 2, semi-autonomous driving system. Capabilities: offers adaptive cruise control, lane keeping assist, and highway assist features. Nillionaire Investor's take: Rivian is a newer EV entrant also developing its own ADAS. While promising, they face intense competition and significant capital expenditures. RIVN is a higher-risk investment, tied to the success of their EV production and expansion of their ADAS capabilities. Best for investors with a strong belief in Rivian's long-term EV market share and self-driving vision. 1. Nissan ProPilot Assist 2.0 ticker symbol NSANI OTC markets. Technology combines cameras, radar, and highly accurate 3D map data. Uses an advanced driver monitoring system. Level 2, hands-off highway driving. Capabilities: allows hands-off driving on designated single-lane highways, including automatic lane changes and navigation on certain routes. Nillionaire Investor's take: Nissan offers a more traditional automotive investment with a strong commitment to practical ADAS. NSANI is a more conservative play, focusing on delivering reliable hands-off driving on highways, suitable for investors seeking exposure to ADAS, without the volatility of pure AV tech companies. Key differences in technology philosophy: Tesla versus others. The most significant difference lies in Tesla's vision-only approach versus the multi-sensor fusion approach adopted by most other leading companies. Waymo, Cruise, Mercedes, GM, Ford. Tesla, vision-only. Pros: lower hardware costs, easier to scale to mass production, leverages a massive fleet for data collection, believes cameras combined with advanced AI can replicate human vision and achieve full autonomy. Cons: vulnerable to visual occlusions, glare, heavy rain, snow, phantom objects, and situations where visual information is insufficient. Requires extremely robust AI to compensate for the lack of redundant sensor data. Multi-sensor fusion, LiDAR, radar, cameras. Pros: redundancy provides greater robustness and predictability in diverse conditions. LiDAR offers highly accurate 3D mapping and depth perception, less affected by lighting. Radar excels in measuring velocity and distance, even in poor weather. Cons: higher hardware costs, more complex integration, and processing of diverse data streams. In essence, Tesla is betting on a brute force AI approach with vision data to solve autonomous driving, aiming for a scalable, widely available solution. Other companies, particularly those pursuing level 3 and 4 autonomy, prioritize sensor redundancy and highly detailed mapping to achieve a higher degree of safety and reliability within more defined operational domains. For the Nillionaire Investor, navigating the self-driving car sector requires a nuanced understanding of technological approaches, market positioning, and risk. The allure of level 4 and level 5 autonomy and the massive addressable market they promise is undeniable. However, the path to achieving these levels is fraught with technical, regulatory, and ethical challenges, as evidenced by the recent setbacks faced by some prominent players. Key investment advice for the Nillionaire Investor: safe approach, diversify across leading OEMs like Mercedes-Benz, GM, and Ford. They blend stable auto business with credible ADAS investments. While their AV progress might be more measured, their existing revenue streams and market presence provide a degree of stability, and they often partner with pure-play tech companies, giving you indirect exposure. Risky approach: pure play. Hit straight self-driving companies like Alphabet, Waymo, or Tesla for higher risk-reward. They focus directly on autonomous vehicle tech. Tesla's recent pilot in Austin is a highly promising first step, currently undergoing crucial monitored trials for future expansion. Picks and shovels providers: Mobileye is an excellent example of investing in the underlying technology that powers many self-driving systems, regardless of which OEM ultimately dominates. Chinese EV/AV players, companies like Baidu for its Apollo platform and Xpeng are significant players, particularly given China's rapid advancements in the space. NIO is another Chinese EV maker with strong ADAS, trucking autonomy. Companies like Aurora Innovation focus on the autonomous trucking segment, which may commercialize faster than passenger robotaxis due to simpler routes and clear economic benefits. Long-term horizon. This is a long-term investment. Expect volatility, missed deadlines, and ongoing R&D expenses. True profitability from fully autonomous services is still years away for most. Even for Tesla, the Austin Robotaxi launch, while a milestone, is a limited pilot, and its broader financial impact is a future consideration. Technological conviction. Understand the different technological approaches and decide which aligns with your technical conviction and risk appetite. Tesla's vision-only approach is a bold bet, while others prefer the redundancy of multiple sensor types. The success of Tesla's robotaxi hinges on the ultimate scalability and safety of this vision-only approach without human intervention. Regulatory landscape. The regulatory environment is still evolving and can significantly impact deployment timelines and operational capabilities. Texas's upcoming regulations are a prime example of this dynamic, and all AV companies must adapt. Keep an eye on regional approvals for Level 3 and Level 4 systems. Ethical and safety considerations. Public perception and safety records will be paramount. Companies with transparent safety data may gain an advantage. The safety monitor in Tesla's initial robotaxi fleet highlights the ongoing importance of safety validation in real-world deployments. The self-driving car industry is a high-stakes, high-reward arena. For the Nillionaire Investor, it presents an opportunity to invest in a technology that could fundamentally reshape society. By conducting thorough due diligence, understanding the competitive landscape, and maintaining a long-term perspective, one can strategically position their portfolio to potentially benefit from this transformative revolution. Remember, hard work beats talent if talent doesn't work hard. For your investments, consistent innovation and relentless execution will be the true drivers of long-term success in this transformative space. Stay savvy and happy investing.